All right, what up, guys? Anthony here, Special Analysis. Welcome to the video. Hope everyone's having a wonderful Friday. I want to talk about how I navigated my own trades this morning. Also want to talk about the morning overall. And again, I do these videos on a daily basis to kind of recap my approach to the market. I do this because, listen, there's hundreds of gurus out there or discords out there that you can choose from to to work with or to join or whatever. And I'm all for anybody who's willing to help somebody, as long as their intention is to help somebody, not just create some source of income. Now, I understand business. I've been in business my entire life for myself. But with that statement being made, like, for me, it's really about the raw trading. Like, you don't come to me for fluff and buff. You don't come to me for, entertainment, things of that nature. Like, you come to Anthony Special at Special Analysis because you are interested in analysis, interpretation, and expectations. Okay? And that you recognize every trade you take, of course, has risk. Okay? So this is not about fluffing and buffing. This is, again, not a show. It comes down to, are you trading alongside someone who genuinely understands volume, price action, market context? Okay? This is not about fancy indicators. This is not about, some one-hit wonder system. This is about taking a raw market and having a full understanding of what's happening, when, where, and why. And with that, being able to create a thesis around it, saying, what could potentially happen next? And am I able to benefit from that? Listen, more often than not, I see the market, I analyze it, interpret it, provide an expectation, but it doesn't fit the way I approach the market. Whether it works out or not, it's not a fit for me as the trader, right? For me as the trader, I have a very specific way that I'm looking to enter the market, right? So for me, if I void from that, now I'm getting lucky or suffering a consequence. And I don't want to trade like that because it becomes very hard to go, okay, great, I had this wonderful trade, I made a whole bunch of money, but I broke my rules, right? Or, oh man, I suffered this loss, and really it's my fault because I broke my rules. Like, I don't want to break my rules. Right? Like, I've done this for a long time. I understand how important it is to be extraordinarily structured. There are different ways to approach the market, right? You can be a retracement trader. You could be a pullback trader. You could be a correction trader. You could be a breakout trader. There's tons of different ways. And I'm not saying that there is a right or wrong. All I'm saying is the way you enter that trade is really got to be consistent with the way you like to trade. Right? Like, I have two strategies. One is a breakout strategy, and the other is a retracement strategy. Those are the only two ways that I approach the market. Right? I try not to trade inside of a ranging market unless I genuinely believe we're going to break down or break out. And I'm going to talk about that today because that's kind of the scenario that we played into. Right? Today is May 10th, Friday in 2024. We had 10 a.m. consumer sentiment and inflation expectation numbers coming out. So the morning as a whole was a little dicey. We get through the opening bell. We talked our way through, right up to it. No problem. Didn't have any really kind of mishaps. Had a full understanding of what was happening. Opening bell comes. We give it a little breather. 10 o'clock comes. The numbers come. The markets start to sell off, but they were fairly tight. I don't want to trade inside of a super tight range. I want a big expectation versus the small risk that I'm going to take. All right? Like, that's the way I personally want to trade. So what we're going to look at today is the way I personally traded. Again, I do this because I want folks that come to my website, through email, however I reach you or you reach me, I want you to be able to say, hey, I like the way this guy Anthony trades and I think I can learn from him, or I don't like the way he trades, so I don't want to build my experience around his analysis, interpretation, or expectations. And I'm totally fine with that, right? Like I'm totally fine with that. Like, I'm not here to sell you something. I'm here to offer you my time, my services. If you are interested in them and I can be of service to you, I'm happy to be. If we can't, like, I'm just happy to be friends. Like, I'm totally fine with that, right? Like, for me, I have dialed my focus of my career on the trading. Why? Because the trading is what pays me, right? Regardless if people want to learn from me or not, the trading is what keeps the money coming in the door. And two, for the people that want to learn from me, they should want to learn from somebody who's laser focused on the trading, not the marketing, okay? There are these internet gurus out there that are revenuing over $1 million a month of your hard-earned money, but they're not actually placing any trades. They're just simply providing you a service built around a really great sales team, sales funnel, sales process. And that's all fine and well. I'm not that guy. I've worked for those people. I understand the business really well. I want to be focused. I want to spend my hours of the day understanding the market, because me understanding the market allows me to help you better understand the market. And after you've bought thousands and thousands or tens of thousands of dollars a program, you may go, hey, listen, this guy Anthony's willing to spend 15 hours a week with me, 3 hours every day, 60 hours a month. Like, he's willing to spend a lot of live time with me, whereas somebody else is sending me an email once a week, right? Or they're only showing up for a 1 hour, training session once a week. No. I think what I offer is extraordinarily reasonably priced, because at the end of the day, you're getting my time, my knowledge, my experience, my know-how, right? You're getting somebody to learn alongside, right? And with that, guys, I'm a student of the market. I want you to know that. I literally practice what I preach. I come to the market to learn something new every single day, right? Every day I take something away from the market that makes me a better trader the next day, right? And that's, you guys should be too. You guys should be too. I'm 13 years into this. My goal is to help shorten your learning curve by giving you my time. Because with my time, we'll give you that exposure to experience, exposure to analysis, interpretation, and expectations. I don't know that there's anybody else out there that's providing the fulfillment level at such a high point that I am for such a reasonably priced. And if they are, God bless them. I hope they're doing wonderful. Okay? So let's dive into this. I didn't really want to go off on that, but I wanted to kind of get that out of the way. Had some questions in some prior comments, so I always like to address that first. What you're looking at here on my screen is a 5-minute chart, meaning each candle is a 5-minute rotation of light sweet crude oil. This is the June 2024 expiration. Top left, you're looking at a 4-hour chart. That's where I do my analysis. My analysis stems at a monthly chart, weekly chart, daily chart, 4-hour chart. Okay? And then from there, there's high volume nodes and things of that nature, volume profile. I'm not going to get too deep into that. But here nor there, that's what we're looking at. And at the bottom left here, this is the US dollar futures index, also a 5-minute chart, just so that I have kind of an idea if the dollar is pulling in one direction or another. Often markets, NASDAQ, S&P, gold, crude oil, commodities, things of that nature will have an effect if the dollar is doing something in a relatively strong way. So I do monitor the dollar. All right, so coming to the market this morning, having my cup of coffee, 6:30, 7 o'clock. I'm watching this top right here start to form, all right? And I'm looking at it and go, all right, I keep watching $80. Now, on my other screen, I run all my order flow, okay? I'm looking at the book map, which gives me liquidity in the market. I'm looking at session volume profile. I'm looking at session delta volume profile. I'm looking at the tape, which is the time in sales. And I'm looking at a footprint chart, both bid and ask and delta at each and every price print, okay? So a lot goes into that, which helps me provide more accurate analysis, interpretation, and expectations. Okay? This way, when I go through this video and I tell you exactly where I believe that if price were to break this area or flush through this area, we were going to get an extension, and I'm going to explain exactly that. So again, we got a high being placed here. You could see we put this line in at 79, what was that, 84 roughly, where we really have a hard time as we come back up to it. We start getting buyers absorbed on this first push back higher. We push lower, we come back, seek more resistance at this level, take this plunge lower, pull back up, again, more resistance. So now we've gone along the lines of placing essentially lower highs followed by lower lows. Okay, so we got a low placed here, we got a little low placed here, we have a more significant low placed here, and then again a more significant low placed right here. So all this while I'm watching $80, okay? There is a lot of notable liquidity resting at $80. Now, every time we run back towards it, there's always a chance of a spike, grab the liquidity, and then we pull back if we don't follow through, right? So what's sitting at $80? Probably a lot of stop orders, or a lot of orders to enter short. More often than not, probably a lot of stop orders. And you'll notice, I think the high of the session was 79.96, just 4 ticks short of that liquidity. Opening bell hits, we get this spike back higher, and we fall short again of that $80 liquidity. Now, I'm watching this happen, and I'm seeing a ton of buyers getting absorbed right here in the top of this candle, and I am really, really tempted to go short. Now, if there was not all that resting liquidity at $80, I probably would have smashed the sell button, but I didn't because I was concerned that we could push into that liquidity. Also, opening bell can be a little erratic, followed by those 10 o'clock numbers, consumer sentiment and inflation expectation numbers coming out. So I really want to just let this morning kind of run its course, and then we got into the nitty gritty. So the 10 o'clock numbers hit, and now we break the session low. The session low down here is at 79.43, my apologies, and that was plotted at 4:45 a.m. Eastern Standard Time, New York Seaboard time. All right, so we break this level, and very specifically at 79.35, there was a lot of aggressive buying orders that got filled, okay? A lot of orders. So that was concerning to me, that we may very well rebound from here by simply grabbing whatever orders were resting below the session low. Now, we had what? Basically a failed double top. Okay? So we made a double top. To the neckline of that double top is this very specific low right here. Okay, and that low is at 79.47. And we are now breaking that, what we would consider a neckline of a double top. So, what am I looking for very specifically? I am now very specifically looking if I can identify that was what was previously an area of support that drove price back higher, now appointed the neckline of a double top. Is that area, now that it's been broken, going to provide resistance? And if it does provide resistance, can we flush through 79.35? Okay? The confirmation was a close below 79.35 that we were going to go lower. Lower to where? There was a little bit of liquidity at 79.20, a little bit of liquidity at 79.05, higher time technical support at $79. So we were expecting at least probably a 30 to 35 tick push lower. And we got it very efficiently. Now, where is the place to enter? There's a couple ways to have played this, okay? I played it on the smaller risk approach, all right? So as price came back up here, and I'll zoom this in so you can see it a little bit better. See this little green box that I have drawn here? Notice that previously, where sellers were absorbed, buyers were now being absorbed. So I said to myself, listen, maybe this pushes 79.35, maybe it doesn't. But if I get short here at 79.50, and I placed my stop at 79.55, just above this prior absorption area, right? Because notice we just came back to retest what was previously short-term at least support is now newly appointed resistance. So I got short here. I placed my stop 79.55, and I took my profits, my first profits, on the retest here of 79.35. Okay? So I pulled profits very quickly. Why? Because I knew if we were going to fail to go lower, that's exactly where it was going to happen. It's exactly where it was going to happen. So I covered a good portion of my trade, 15 ticks, okay? It wasn't a lot, but it was extraordinarily calculated in the sense that because there was so much volume there, it was highly likely we were at least going to return to that area. And we did. So I covered a large portion of my heavily leveraged position there, and then I just tightened my stop up so that if I got stopped out, I gave it a little room to breathe still, but if I got stopped out, the amount of profit I had already taken with the stop out, I was still profitable for the day. Okay? Because this was the last trade I was going to take. I was done. I was leaving the office at 11 o'clock. Right? I had other things to do today. And that's exactly what happened. We pulled in. We re-penetrated 35. I actually took a little more of my position off at 30 because I saw this starting to get dance here and get a little bit dicey. So now I only had about 25% of my position left. Right? And I just snugged my stop right to the top of this wick. The market dances back up, retests this exact buying absorption area on this wick, and then the market finally settles below 79.35. Well, what happened? We just started selling off and selling off and selling off, and actually ended the entire day basically right at kind of the low of the entire session. This dumped about 120 ticks. Now, I told you I was leaving the office. I had stuff to do. I wasn't going to leave a position running. I took the rest of my position off at $79 because that was my higher time frame support. Right? So, frankly, when we got to 79.05 where there was a little bit of liquidity, I just started pulling my stop, trying to give it enough room to breathe, and it ultimately tapped out at 79 before there was any retracement. As you can see, there was really barely any retracement along the way. I had my stop resting right here. I was well in the profit. If I got stopped out, I was totally content. And then you can see we came right in here and just tapped 79. We did get a little pop back up to 79.15 before we absolutely continued to tumble. So that was the read, right? It was a matter of, hey, the prior morning price action was a little choppy, right? Chop is where money goes to die. I got to leave it alone, let it do what it's going to do. I got to step back. I got to get through the opening bell. I got to get through the 10 o'clock numbers. The NASDAQ, the S&P, and gold also chopping all over the place. Listen, it was a Friday. It was what it was. If I didn't place a trade today, I was totally content. I wasn't, I even woke up this morning with the thought process, we got numbers. If I don't place a trade today, I'm totally fine with it. I need to have a high level of conviction in order to place a trade going into the weekend in an already net profitable week, okay? I was up and down a little bit this week, net profitable going into this morning. I was not going to end the week on a bad trade, especially as I'm ready to walk out the door at 11 a.m., and all this is transpiring at 10:40. So I got 15 minutes to make it happen. And that is what it is. As this continued to run, I just delayed myself walking out the door because I knew I had to get out of the position before I left. So with that, guys, that's how I broke it down. Sometimes it's easy. Sometimes it just takes time. All I can tell you is you have to be consistent in your approach to the market. And you must approach the market from a very disciplined, very conservative, risk-oriented posture in order to do this sustainably. All right? I tell my wife all the time, like, she sees me midday, she's like, you look exhausted. I am. It's exhausting, right? Like, you are reading every little movement of 4 markets as they're moving because you're putting live money on the line. Like, it's exhausting. By the middle of the day, like, I gotta take a lunch break because I'm exhausted. It's very, very mentally taxing, and not a lot of people have the stamina to do it. Right? It took me a lot of years to get to the point that I could look at 4 markets all at the same time, analyze, provide interpretation and expectations. It's not quick and easy. So my goal is to help you and your learning curve and your trading career advance so that it didn't take as long as it took me. Can I guarantee you any results? No. Right? I'm not on the other side of the computer doing it for you. I'm simply here to provide you, through experience, analysis, interpretation, and expectations. What you do with it at the end of the day is ultimately up to you. Right? I spend 10, 15, 20 minutes on each of these videos because I want you, through these videos, to get to know me, to get to know my approach, and if it aligns with you, great. If it doesn't align with you, that's okay. You may go try 4 or 5 different approaches, and you may come back and say, you know what? Maybe I got to give Anthony a chance. Maybe I got to take that extra conservative approach to the market, right? Maybe some of the other things, they were great when they worked, but there was a lack of consistency, right? If you were just relying on an indicator all by itself to tell you where to buy and sell, you probably got chopped up, regardless of which market you traded today. And you probably would have been very frustrated. Because more often than not, knowing when not to place the trade is actually more valuable than knowing when to place the trade, right? I spend most of my time providing a reason not to trade so that when I can't provide that reason, I know with a great deal of confidence that I can place this trade. If it works, wonderful. If it doesn't, to me, it was a low risk setup. I risked a little bit trying to make a lot. I paid myself, I protected myself. If I got stopped out, I lived to trade another day. So those are kind of my final thoughts as I wrap up. I know this video was a little long-winded, but I always want to give you guys as much of my thought process and insight as I'm able to. If you enjoyed this, I simply ask that you like the video. If you have any questions, feel free to leave a comment below. Also below is some of my site information and my email address. It's my personal email address. You can email me. I will certainly respond to you. If you haven't subscribed to the channel, please do so you don't miss the next video. God bless, guys. I'll see you in the next